Okay, good afternoon, everyone. Welcome to the 2022 annual employers meeting of the West Yorkshire Pension Fund. The aim of today's event is to inform you about the performance and activities of the fund for 2021-22. So I can tell you that for the year to March 31st, 22, West Yorkshire Pension Fund actually had 307,797 members and encompassed 463 employers across the UK. The largest employers in the fund are the 5 West Yorkshire councils, that's Bradford, Cllr, Kirklees, Leeds and Wakefield. But if we also add in the shared service administration arrangements that West Yorkshire does for other pension funds, then the West Yorkshire Fund actually served around 480,000 pension fund members and 950 employers. In terms of the performance of the fund's asset value rose by almost 10% to 17.84 billion at the end of March, leaving West Yorkshire Pension Fund very well funded, leading it into the triennial actuarial valuation. And I know there's some more information on that coming later on. All aspects of the fund's operations, however, continue to feel the impact of the COVID-19 pandemic. And in addition to that, the war in Ukraine, started by Russia, has increased investment market volatility in the months since. The investment market performance was actually strong up until February 2022, when the invasion of Ukraine took place. This impacted global markets in the last few weeks of that final quarter. The consequences of that have persisted through the intervening months. And both of the events prompted a number of, and the impact of global markets in the last few weeks of the quarter, as we said. The consequences of that persisted, and recent events in the UK in September have added to those uncertainties and questions. And both of those events prompted a number of questions from both employers and fund managers, and employers, I beg your pardon. Throughout 21-22, the fund continued its asset allocation shift to increase infrastructure, property and credit strategies, and to reduce equities and government bonds, all of which is designed to improve the diversification within the portfolio. This has been delivered in the context of environmental, social and governance policies, and also responsible investment and stewardship. They've all been considered in detail and further developed by the investment advisory panel during the year. As I mentioned earlier, the fund has collaborative arrangements with companies on a range of issues, and also has engaged in meeting with companies through the local authority pension fund forum, something which has been increasingly successful this year. West Yorkshire Fund's pension administration teams have continued to deliver service to a very high standard and quality throughout the year. Not only was service maintained, but the fund successfully took on an administration of 4 further fire and rescue authority pension funds during the year. All of that has combined to enable the 2021-22 annual cost of managing West Yorkshire Pension Fund was less than £34 per member. This compares to an LGPS England and Wales average of £274. If you combine that together with the fund's investment and funding level performance, this represents exceptional value for members and employers. So I would like to thank the administration and investment staff of the fund for their continued hard work and this excellent performance. I'd also like to thank the fund's members of the investment advisory panel, the joint advisory group, the local pension board and the fund's advisors for their contributions. Finally, at this point, I would like to actually mention Rodney Barton, who's the director of the fund. You'll be hearing from Rodney shortly, but Rodney will be retiring this year after leading the organisation successfully for 12 years through some pretty eventful times. I'd like to say thank you to Rodney for his years of public service in this field, not just at West Yorkshire, but across a number of LGPS funds and national organisations, and wish him well in retirement. At the same time, I'd also like to welcome Ewan Miller, who will be taking on the role of Managing Director of the fund from next month. Ewan is actually joining West Yorkshire from Greater Manchester Pension Fund, where he was the Assistant Director. So Without further ado, I would like to move to today's detailed presentations, and the first one of those is Rodney Barton, who's the director of the fund and will be updating on fund performance and activities during the year. Over to you, Rodney.
Thank you very much. Good afternoon. I will cover some key aspects of the annual report, as well as look at some of the significant changes over the longer term. First, however, I just want to say a few words about the recent market turmoil in government gilts, which was linked in the press to pension funds. The pension fund issue was confined to those schemes running liability-driven investment programs, essentially some form of insurance against falling interest rates, and they found themselves on the wrong side of events when interest rates in fact rose. I'd like to reassure you that West Yorkshire does not use such geared investments and did not suffer any significant falls in its asset value. Clearly, all markets reacted badly to the budget, but the fall in the value for West Yorkshire Pension Fund was limited. You will doubtless hear more about this in the presentations from our investment advisors later on. 2022 is once again a valuation year, but I think we can face this with reasonable equanimity, even though markets had a bit of a setback just before the critical date of 31st of March once again, and we'll hear more about that in a later presentation too. On McLeod, the government has now provided clear indications of what the solutions for the local government pension scheme are, which will be a major exercise for us, reviewing thousands of cases to ensure that any discrimination is put right. And we may in fact need further data from employers to help us in that exercise. So please keep an eye on your email. Inflation, which has been asleep for almost 30 years, has suddenly reared its head. West Yorkshire Pension Fund will be supporting significantly higher pension payments in the near future, as well as the rising costs that all of us will be facing. The Russian invasion of Ukraine had an immediate effect on financial markets, and markets continue to suffer from economic uncertainty, which is reflected throughout the UK and indeed the world, providing many interesting challenges for our investment team. I mentioned evaluation previously, so I won't say much there, except that the world is not quite as good a place as it might have been following the Russian invasion, but it should not be too bad. Our shared administration service continues to work well and grow, allowing for increased efficiencies, including the development of more automation within our systems, which we hope will offset some of the cost inflation that we're facing. Working from home has now become hybrid working, which enables us to make much better use of our office accommodation. Total value of the fund at £17.9 billion at the end of March was hit by the Russian invasion impact on the markets. And that left markets very uncertain, with expectation of growth around the world already in doubt before that happened. That has had a more significant impact on Europe than anywhere else. But generally speaking, we're facing difficult times right now within the investment world. We had 433 employers within the fund at the end of March, and the membership total was just short of £308,000. And I'll come back to those numbers a bit later on. This graph shows the steady increase in the value of the fund over time. And as you can see, we did in fact have over the whole year a reasonable increase just in time for the valuation at the end of March. The pooling agenda is driven by government, but It is benefiting West Yorkshire Pension Fund, working in partnership with two other large efficient funds, Greater Manchester and Merseyside Pension Fund. And as you know, Greater Manchester also produce excellent assistant directors who move on to greater things. The latest data shows that the Northern Pool has the lowest cost of all the pools. Its long-term performance is above benchmark. The total assets in the pool now over £50 billion. The Cllr investment vehicle for infrastructure now has £2.5 billion committed and 2.1 billion invested. And between us, we have committed £2.3 billion to the Northern Pool Private Equity Programme. The committee meets every 6 weeks, and all the assets are now under the control of Northern Trust, who are a custodian for assets for all three funds and the pool. Northern Pool is the first and only pool so far to have made significant investments in infrastructure, which was one of the government's primary objectives when they began the pooling agenda, and has created Cllr, which is managed by staff from the partners, and it is regulated, so it is available to other pools to partner with it. Nest, the government-backed national pension fund for individuals, has also invested in Cllr. Moving back to West Yorkshire Pension Fund, then, this is a summary of the fund account. Our net position after contributions, benefits and costs is the fund was down by £114 million. And after investment income of £418 million, which is £62 million more than it was the previous year, the net position for the fund was an increase of £304 million in assets. This means we continue to be cash positive, a position that should continue for some time to come. The value of investments increased by over £1.6 billion by the end of the year. Contributions receivable during the year were almost identical to the previous year, but on benefits, unsurprisingly, they continue to rise, and pensions and lump sums paid out over the year rose by just over £41 million together. Based on the September CPI figure, we expect pensions and payments to be increased by 10.1% from next April, but this has not yet been confirmed. And similarly, accrued benefits under the care scheme should be increased by CPI. Pension administration costs are up as we managed to recruit to a number of vacant posts during this year, and continuing investment in IT systems and improvements in service resilience added to our costs. Investment costs rose again as there was some portfolio restructuring during the year, but West Yorkshire Pension Fund remains the lowest cost amongst all local government pension schemes. This slide just summarises the membership of the scheme. Scheduled employers are those whose employees are in the scheme as of right, whilst the admissions are those employers who have some discretion over membership and could choose to leave the scheme. Looking at individual members, during the year we had 21,275 joiners and 8,407 retiring, and leavers for other reasons, just 3,404. We have almost 105,000 active members now. Service we provide is key to both you as employers and also to our individual scheme members, and we have a long list of key performance indicators, of which I'll show a small sample in a moment. There is a longer sample in the annual report. During the year, we achieved accreditation for information management systems under ISO 27001, which demonstrates the security with which we handle data, something that the team here is justifiably proud of. Awards in and of themselves are not important, but they do mean that our service standards are recognised by third parties. And during the year, we were shortlisted for 6 awards. As part of the day-to-day management, as I said, we've got key performance indicators which enable us to see that what we're doing is delivering the service we think it should be. This is a small selection of what we have done during the year. As I say, there are many more to be found in the annual report. As you can see on this slide, we have not quite met the 10-day turnaround on estimates, but recruitment and system improvements should get that back on track. The team exceeds most of its targets and endeavours to deliver a top class of service both to yourselves and to individuals, but at a very low cost. The service is being delivered against a background of increasing numbers and therefore efficiency. In 2009, there were just 3 employers that we looked after here, whereas by the end of this financial year, we administer 21 fire authorities, Lincolnshire Pension Fund, and also 2 London boroughs. We saw previously how the investments have risen over time from 5.9 billion in 2009 to 17.9 billion in 2022, up over 200%. These assets relate purely to West Yorkshire Pension Fund, as all funds look after their own assets. On the administration, which relates to all the names on the previous slide, in 2009 we had 190 employers in total and membership of 218,000. By 2022, we have 949 shared service employers, an increase of almost 400%, and 480,972 individual members we look after, up over 120%. We still managed to achieve a reasonable level of performance, but that's partly due to investment in systems, but mostly due to a skilled and dedicated staff servicing employers. Our shared service offer has increased steadily since 2014, and it continues to grow today. This is an opportune moment just to refer again to our costs. The Department for Levelling Up Housing and Communities collects statistics from all the local government schemes on the basis of cost per member. Our investment management costs per member are £17.97, way below the average, which is £238.43, and the highest is over 500. We are 5th on administration at £13.73 per member, which is a top 10% performance. And this low cost combined with the service quality is why we're able to build up the joint service arrangements and thereby reducing the average cost for all employer participants. Looking at the total cost per member, we're also the lowest at £33.97 against the average of £274.34. The low cost of investment does not come at the expense of performance, as can be seen from this chart, where the benchmark is being beaten by the team consistently over the long term. The latest year benefited from exceptional returns on the private equity portfolio in particular. You'll hear more about investments and performance in subsequent presentations, but this consistent outperformance feeds into the actuarial valuation benefiting council taxpayers of West Yorkshire as well as employers. This slide shows the steady progression over the years to full funding. With consistent returns above benchmark, the 2019 valuation shows the fund as being more than fully funded, and we anticipate a similar situation for 2022. And while doing so, we will be increasing the levels of prudence in the assumptions, which is wholly appropriate considering all the uncertainty that we're facing in the world at the moment. I'll just leave you with a couple of thoughts. West Yorkshire Pension Fund takes a long-term view, not only in its investments, but also its investments in the administration. It is financially very sound with a positive cash flow of over 300 million a year. We expect that positive cash flow to be there for some time to come, meaning that we will not be at the beck and call of sudden moves in investment markets, and that for pensions in payment, they're set by regulation and not affected by movements in stock markets or investment returns, or indeed changes to the LGPS rules. Thank you very much for your attention.